Hello. Oil prices rose this week whilst gas and electricity prices fell. So let's take a look at the week's actions in some more detail. Oil prices softened on Monday, pressured lower by concerns over falling Chinese oil consumption figures. A report by the EIA forecast a rise in US production, which also contributed to the movements. Brent fell $1.3 per barrel day on day. Monday's losses were then reversed on Tuesday thanks to a number of contributing factors. Firstly, it was reported that the US imposed sanctions on the state-run oil producer in Venezuela, which would mean that OPEC's output is reduced going forward. Secondly, the chairman of the National Oil Corporation said that Libya's largest oil field, the Al Shahara, will not reopen until the armed groups that have been occupying it for nearly 2 months backs down and leaves. Wednesday's weekly EIA inventory report showed an increase in stocks of 0.9 million barrels. However, as this was less than expected, prices rose. Thursday saw prices ease somewhat and Brent closed at $62.11 per barrel. That's still up just shy of $0.8 per barrel compared to last Friday. Despite the system being undersupplied for most of Monday's session, near-term and curve contracts all closed lower day on day. The wider fuels market provided downward pressure. In contrast to Monday, the system was oversupplied on Tuesday. However, once again, wider fuels directed gas. The upward movement in oil was the main catalyst. As colder temperatures hit the UK, the system coped well. Throughout Wednesday's session, the system was nearly 20 MCMs long. As a result, all contracts fell. Prices continued to soften on Thursday as the system was once again oversupplied. Close to maximum capacity imports from Norway and the Netherlands, alongside higher LNG and storage sendouts, accounted the increase in demand. Last night, contracts out to September 20 all shed value. Winter 19 lost nearly 1 pence per therm. Carbon prices fell on Monday as Germany sets out its plans to cut its dependency on fossil fuels. Carbon fell €1.16 per tonne, which directly impacted on the UK power prices. Curve power prices tracked gas upwards on Tuesday before following them lower on Wednesday. Wind generation was forecast to reach 4 gig by Wednesday, with lower wind generation increasing the reliance on gas-fired generation. All prices fell on Thursday despite the system being undersupplied. Last night, all contracts closed lower than last Friday. Winter 19 fell nearly £1 per megawatt hour. You can download the full version of this report from our website. Thank you for watching and we'll see you next week.